Welcome to StockOdds. This is Odds and Ends with Rob Friesen and Dave Singh. Good evening, Rob. How are you?
Yeah, great. Good to getting together with you again. Another week's gone by, and here we are preparing for Monday trading.
Yeah,
Little difference. This Monday will be a little bit more volume than the previous Monday, I think, just because of the holidays that were going on for some participants. But anyway, it'll be a full week here. Kind of one of those in-between type weeks where we still got a couple more days of mid-month seasonality possible, which started on Wednesday, could last until Tuesday. So we'll have to consider that. And then it's quite a few days before we get into the last 5 days of the month, which this particular month, those last 5 days fall within the same week. It's not split by a weekend. Okay?
Mm-hmm. Good. Yeah, we just came off a big couple days at the end of the week there. Thursday and Friday were up kind of big. And right now the futures are kind of down slightly, but oil is still strong. And markets look like they're breaking up to the upside, but we are
Let's run through that for a second. Let's run through that. Okay. So let's starting with, kind of the granddaddy, the Dow. Everybody tends to look at the Dow. So when you look at that, it lifted off above its 20-day high. So it actually kind of broke into a bit of an air pocket, and it has tagged that upper Bollinger Band. It's penetrated into it, but it's kind of in this blue sky and almost seems like it wants to go back to, the August highs, if not, actually the August highs were the highest of the summer. So that number there would be 356.60 for the diamonds. $356.60 would be the high, and we're currently at 352.85. So we've got some room to move. It could do it in a day, or you could do it over a couple days. Okay, that's the diamonds. Looking at the next is the SPY S&P 500. That just barely cleared its 20-day there. And so it doesn't look quite as robust, but that also means that it may have a little bit more, drawing people in just because it didn't get ahead of itself too much. But it's also into the top Bollinger Band. And the high from September, so whereas the diamonds hit the high in August, we hit September 2nd, we hit the high on the SPY, 454.05. And it's currently trading at 446.66. So some room to move, and a little bit more room than the diamonds do to hit the high. Next is the Qs. The Qs were interesting because we saw that big, kind of tech savage routing there at September through October. And they were a little bit reluctant to spring back into action, but the last 2 days they did. And our high was set September the 7th.
Mm-hmm.
So that's interesting, right? So not everything moves exactly at the same time. So it hit September 7th was the high for the Qs. And then it's been pretty much down since then, all the way to where we found ourselves on Wednesday of last week. And then we popped up Thursday, Friday. So that high number on the Qs was 382.78, and it's currently at 368.94. So it has the most room to move, of those three sort of stronger horses. Now let's look at IWM. IWM was really interesting because it popped up a lot at the open on Friday, but it pulled all the way back. It just kept going down all day from that point. And so it was quite severe of a reversal on it. It had penetrated right into that upper Bollinger Band. Also, at the open, had broken the 20-day high, but then it pulled it all the way back to close underneath it, whereas the other ones closed above it. Its high was set way back in March.
Mm-hmm.
So it's been a different animal altogether. So when I look at these right now, I would say that the Russell just looks the worst for Monday of the four. Your thoughts?
Well, that's good that you said that. So I was looking at the seasonality almanac for the last 5 days of the month because many times you said some of the action is like even a couple of days before that. So come Thursday, Friday of this week, we're kind of positioning for what's going to happen the next week. And you said we have 5 days. The last 5 days are all within 1 week.
Right.
So I pulled up the almanac and I wanted to see what are the strongest sectors or market caps. And in line with what you just said, small caps are expected to be underperformer relative to the spider on those last 5 days, and also XLP. And the sectors that are likely to outperform are technology, QQQ, XLK, SMH.
Okay.
These are expected to be an outperformer for those final 5 days of the month.
Right.
So it's kind of an undercurrent of big cap technology risk on, and not small caps, and not even healthcare. Healthcare is expected to underperform as well. So that discount we've gotten in technology from September from the big sell-off, there's still room for that mean reversion to happen that final week, and we might even get more bang for our buck than the odds are predicting, given that it has been sold off so much. We got some reprieve on last Thursday and Friday, but I think there's still much more to go, especially with the way the stats line up.
Well, it's interesting, like looking at SMH, you have to look at SMH and say, well, what makes it tick? So the first thing is that it's not equally weighted. So the number one stock in the SMH, and historically, if you look back at like leading a lot of rallies and other things in the marketplace, it kind of has been one of those indicators, and it's had some off years too, but overall it's kind of been an interesting indicator. But number one in it now is Taiwan Semiconductor.
Mm-hmm.
Now, China's after Taiwan, right? So for a lot of reasons, but if anything was to happen there, that could impact SMH. But Taiwan Semiconductors is also, the foundry for producing tons of chips globally, and we're in the middle of a chip crisis that affects, as Goldman said, it affects 169 industries.
Wow!
Like you can't get up in the morning and do anything in your life without interacting with semiconductors, right?
Yeah.
And your new car has about 3,500 chips in it.
Wow!
Right. So you can imagine why Ford's profits and you could see why these industries get affected, because hey, if they have orders but they can't fulfill those orders because there's no chips, then we got a problem. But this affects 169 industries according to Goldman.
Wow!
And so obviously the one that people think of the most is what's happening with semiconductors. Okay, well, in this list right here that's in SMH, mm-hmm. I love Texan, ASML. It's pretty pricey, but that's a good one. NVIDIA, love NVIDIA, and TSM. And again, I'm not an advisor. I'm not recommending these things. I'm just looking at the major components, even Avco down in Broadcom, Qualcomm, Micron. Those are all in the SMH. So it's going to be really interesting to see how this ETF performs. And I think we need to be all over this all of the time. Okay. So on the seasonality, what's kind of usual, and so if we see it start to perform better than what's expected seasonally, that might be an indication. We can look at the individual components, maybe the top 10, and see how they're performing within the SMH. Okay.
That's good. Well, I mean, I know of the XLK, SMH, and QQQ. SMH is expected to be way bigger relative to the spider those last 5 days. So I'm going to keep that on my radar for sure.
Well, that's really good. And again, you can always go look at the individual stocks to see how well they're set up. You can actually take odds on the individual stocks of what's in, say, the top 10 in the SMH. And that could be a great way to play too. If you don't want total exposure, you could do long and short. Or if you want full exposure, maybe a bit of alpha by picking the best ones of the SMH. There you go. So we finished the week with basic materials and elite. I couldn't believe the volume increase on Alcoa. Have you ever seen anything like that?
Why?
Like
Why do you think
for a boring basic material thing? I mean, did you see it? It was a massive volume increase the last couple days in Alcoa, and of course, corresponding movement as well. But basic materials finished the week the strongest at up 4.37%.
Do you
Real
think that
estate,
move's exhausted though? I mean, given that huge volume spike.
I mean, it's possible. It pulled back. I mean, it kind of on Friday didn't perform as well, so that might be an indication that it had performed incredibly for the week, but Friday was the softest compared to other things. It was kind of in the middle of the pack, right? If we take the 11 sectors there, it was right in the middle of the pack. Utilities performed the worst on Friday, then consumer defensive. So it was kind of a risk-on day, with one of the weird things being, how well industrials performed, and how well basic materials performed even on Thursday and Friday as well. So for the month, we're still having energy at 14.35%. Financials at 3.71%. Healthcare minus 4.05%. I've loved lots of those short opportunities in the healthcare space. And for the week, they were up second to least. So communication services was affected the most, was up the least for the week, and that's probably because of the Facebook hangover, the whistleblower hangover for Facebook. So communication services performed the worst. Healthcare next, consumer defensive next, and so yeah. I mean, this is always the tension. All of us traders have to wrestle with this. Do you want to fade the strongest stuff, looking for that pullback? Do you want to sort of sell the strongest and buy the weakest for that rotation on a weekly basis? It can be part of what we do. Or do you want to sort of continue with that? So what I do is I made a diversified list, as diversified as it tended to play out just by going to StockOdds and selecting longs and shorts. So I noticed that it is a little bit heavier in some, industries or sectors than others, but it's still what I would call static, in the sense that it was just quantitatively derived and not any discretion in it. Okay, so there's no discretion yet. So going into tomorrow, we can look at pre-market to see if there's any adjustments. So we're in earnings season. This is huge. Earnings season's big, and especially this one, because we have an expectation on S&P 500 in general of their earnings being up 27%. But that didn't account for the supply chain disruptions. So there could be surprises. Like, hey, yeah, I know we were supposed to make a lot, but here's what actually happened. And so we're in earnings season, so that's going to play into things. And then, we've got to see if there's anything that changes between now and tomorrow morning. And we have had a show like this, and then in the morning it's been completely different, right?
Yep, totally.
So I'll make adjustments tomorrow morning. So the choice is this: if there's anything notable, let's say the US dollar moves huge, okay? That's notable. It'll impact commodity-based things differently. If the TLT moves, representing the 20-year bond, if that moves one way or the other, it's either going to benefit financials or harm financials. It'll benefit utilities or harm utilities. It plays out differently. So we'll have to see how that moves. We can make that change in the morning by simply, like if I had long financials and short financials, I could simply say, oh, today's a day that's beneficial for financials, so I'm not going to short any. I'll just buy the ones that are in my list. That's the discretion that I'm talking about.
Yeah.
Okay. But other than that, if it's nothing notable, I'll just run with the diversified list of longs and shorts and sort of mixed industries, mixed sectors.
Business as usual.
Yeah. Okay. Any thoughts in closing here?
No, those are good thoughts. I'm gonna keep an eye out for the last 5 days of the month, especially for next weekend's
Well, I mean,
podcast.
you brought up a very good point about being prepared, looking forward, and also, you're factoring in what has already happened. So, if, for example, even with the overall market, has it gotten ahead of itself from what was expected, or is it behind? Are the sectors, like here we are talking about basic materials having a 1 week performance up 4.37%. I don't think that October suggested that basic materials would be up that much by the end of the month.
Hmm.
So there that could pull back. So this is the sort of mean reverting opportunities that that happen for us. We might see one of the groups has really outperformed what's normal, what's above its seasonal rate, and it may actually come back in line with its seasonal rate by the end of the month. So look for the discount, look for the premium. When you do take a side, you are being more exposed to risk, but it can really pay off as well. So anyway, we'll hit the ground running tomorrow, and great talking with you.
Sounds good. Good luck. Thanks.